It has been quite an eventful week. Perhaps Magnatus is correct in claiming complete responsibility for the recent surge in Bitcoin prices. After all, I did break out the green pants last week, and we both anticipated that this week would be rather nice, and it has been. Cutting things in half is the key. As a result of the demand shock, prices spiked. The supply shock is on the way now. Also, the supply shock is significant since, according to the data, I'm not sure if it was released by you or someone else, minus 69% of BTC has remained unchanged over the past year. The Fear and Greed Index for Bitcoin reached an astounding 79 out of 100, indicating that cryptocurrency investors are engrossed in a tornado of enthusiasm. Since digital assets peaked at $69,000 in November 2021, this figure represents their greatest point. Currently swinging between extreme greed and greed, the Fear and Greed Index is a trustworthy indication of market mood since it is a composite gauge that incorporates momentum, volatility, and volume data. The phenomenal success of spot Bitcoin ETFs since their launch on January 11th is the main reason for the spike in investor optimism. With a combined total of almost 264,000 Bitcoins worth at over $13.5 billion, these ETFs have significantly increased their Bitcoin holdings. Notably, with more than 43.89% of the entire holdings, BlackRock's EBIT ETF is in first place, followed by Fidelity with over 31.76%. Even though these exchange-traded funds have amassed a lot of value in the 5 weeks since they were launched, the Grayscale Bitcoin Trust has been selling off its holdings, selling off almost 161,162 Bitcoins since January 12, 2024. However, with over $11 billion flowing into these ETFs, it is clear that this endeavor has been a smashing success. Notable hedge fund manager Mark Sko anticipates that Bitcoin and other cryptocurrencies will experience further substantial price increases until the halving event in 2024. Investors' enthusiasm for the cryptocurrency industry is growing, and everyone is looking forward to what the future holds. An adjustment in aggregate demand occurred. Things will only get worse from here. There will be no straight line in the demand for ETFs as they rise in value. The growth will be tremendous. Though it may take some time, major financial institutions such as Vanguard, UBS, and Merrill Lynch do away with ETF bans. A major portion of BlackRock's money comes from huge entities such as sovereign wealth funds and pension funds. This is true regardless of whether or not the biggest corporations are on board. The demand shock is here to stay. As of today, April 8th, the daily output is 900 BTC. I find it intriguing that the latest estimations indicate the halvings will take place simultaneously with the solar eclipse. It's quite unusual, to say the least. Everyone gets pumped up when 420 is almost here. In my opinion, it will be 48. At this point, the figure appears. I find it kind of strange if it does happen to coincide with the solar eclipse, however, we don't know for sure. The massive quantity of coins poses a problem for meeting that need. For example, there are 1 million coins from Satoshi or whomever plus an estimated 3.5-5 million coins that are either stolen, lost, stranded, or multi-signature. People, the majority of whom are hodlers who have threatened to pry it from my cold dead fingers, also own 10 million. However, due to the supply shock, our daily output drops from 900 to 450. If the hodlers or hodlers, as you choose to call them, refuse to part with their coins, it will have a significant impact on the miners' ability to make a profit. The fact that miners aren't selling their coins in their entirety is another issue. Though not all of them have been stockpiling to the same extent, some have. The supply issue is serious and will only worsen in the future. Then there is the emotional side of things. According to logic, the SEC already decided on many occasions that ETH and Bitcoin were not securities. Because of this, it is reasonable to approve the Ethereum ETF if you already approved the Bitcoin ETF. However, rationality is completely irrelevant to this, as I demonstrated when watching Gigi on television the other day. Emotions consumed him. Since nothing is ever the same, it becomes more difficult to tell. Something that occurs at this stage of the cycle every time. Crypto summer is coming to a close. We get the parabolic phase in June when we switch to crypto fall. As the project nears its finish, the price action takes a predictable pattern. Bitcoin takes the lead due to people's anticipation of the halving, while the other cryptocurrencies, especially Ethereum, move in lockstep almost like at a ratio. They used to move in lockstep by a factor of 10 to 1 or 8 to 1, and then it spread to the other coins as well. Eventually, some of them become seen, and then they start acting out in their characteristic spiky ways. That was the case with Doge and Shiba in the previous cycle, but it seems to be less of an issue this time around, at least in terms of public attention. That foolish little dog doesn't appear to me every single day. It seems like frogs and other creatures are involved this time. Since I haven't verified this by physically seeing Bitcoin wallets, I suppose I shouldn't assert this about Bitcoin. I was able to observe the Bitcoin wallets that were storing Bitcoin before the Bitcoin ETF was approved. In my opinion, those were somehow connected to BlackRock. In fact, they were likely just stocking up for future purchases. Who knows? It might have been associates or even hedge funds with whom the firm deals. You saw it every day, and that was a new type of front running. I haven't done the forensics to figure out who, but my assumption is that it was pretty. When people engage in front running, it's usually because they anticipate an upcoming event, such as an earnings statement like the one at Coinbase, about which we will speak. People were pretty sure this was going to blow up, so there was a lot of front running. You could see that my profits were increasing daily, and after jogging, they reached even higher levels. When the demand for the ETF started coming in, I think people realized it would be hard to locate enough Bitcoin to buy, so this was a way to get supplies. That may be the case with these. Ethereum has really outperformed the market by a small margin if more people were doing the same thing. Both have been doing about the same, but it has been slightly better in recent weeks. Unlike the Bitcoin ETF, where the sponsors sent quite strong signals, I'd say we're good. Despite all the back and forth meetings, I haven't heard of any lawyers racking up a ton of billable hours on Ethereum.